Welcome. Today we're going to see if Google stock is still worth buying in 2024. This tech giant has over a billion users, but now is under legal trouble and getting some heat from the competition. Today we're going to revisit Google and estimate an intrinsic value for it and see if it's still worth your money. We're going to start by a fast overview of the company, then financials, moving on to new risks, and finally intrinsic value estimation. Overview. Google has many businesses that are used worldwide. Main businesses for Google are Google Search, YouTube, Google Cloud, Ads, Android, and some moonshot ventures like Waymo. In all of these main industries, Google is one of the dominant companies. And the newest moneymaker and grower is cloud. Financials. As we can see, Google's revenue is growing little by little every year and almost every quarter. Same goes for the EPS. I think the most promising sector is the cloud. In a few years' time, it has grown to 3 times that size. Google is still the third largest cloud company, so they are the underdog in the sector. Still, the cloud sector is believed to be growing for many years to come. Google has hardly no debt compared to its assets and income. Its forward PE ratio is around 21 right now and paying around 0.5% dividend. Risks. In a recent lawsuit, Google was found to violate antitrust law, and the penalty is yet to be determined. Analysts expect few scenarios. One option would be to break up Google. This is believed to be unlikely, but would probably just be a good outcome, at least for the investors. Just because experts believe that Google's businesses are more valuable separate than as a whole. Another option is a classic fine of a few billions or millions or something like that. And at least, on my opinion, the most likely solution is to just force Google not to pay Apple. Reportedly, Google has been paying around 20 billion or even more to Apple just to be defaulted in Apple search bar. So the government thinks this is stifling competition. Another risk is Google's reliance on Google search in an environment that is focusing more and more on AI search tools. Most would say that Microsoft's ChatGPT is still the dominant player versus Google's Gemini. I still don't think AI is going to replace all searches or even most of it, so to me this is just a minor risk. To me, AI is really good at helping people do their jobs more efficiently, not so much to search info or specific things. Although AI can give the same answers as Google. Intrinsic value. Now let's estimate an intrinsic value for Google. Google's forward earnings per share is $7.62. Google's PE ratio has been fluctuating throughout the years quite a lot. I would be willing to pay, and a reasonable ratio I think would be around 23. I would think it would be highly likely that Google would be trading with 23 PE ratio in some point in the near future. Also taking into consideration that Apple, Microsoft, and Amazon are trading between 30 and 40 PE ratios. Analysts are expecting quite a lot of growth, but I want to still remain skeptical of anything plus 15% growth rates. First 5 years, I would estimate at least around 13% growth, and after that, the next 5 years around 8%. There is a high probability in my mind that these numbers can be higher or even way lower, so I just want to stay conservative on my estimations, just for a margin of safety. And like always, I would like a 12% return on my money. With these numbers, we can calculate our intrinsic value. Here are some estimated returns on different prices. As of making this video, we are estimating around high 10 to 20% return for Google if all goes well. To me, Google's valuation is quite good, but there are some big risks that I mentioned before. I do own Google already, and I'm considering of buying a bit more. Well, what do you think of Google? Are my estimations way off? Is the US government going to break up Google? Leave a comment below. Remember to subscribe and hit the like. And as always, remember not to lose your money and safe travels.